Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about the market crash of 2022. And I know it's impacting a lot of you day in, day out, wondering when it's going to end. And I also know there's a lot of videos out there, different content creators, there's articles, depending on what news broadcast you listen to. There's a bunch of different views. And I just wanted to give my input, what I'm seeing on my end, what we're hearing from clients, the psychology of what's going on in the market, and just give some feedback from a certified financial planner versus maybe an investing person or an accountant or a news broadcast person. So hopefully this is helpful. Hopefully it kind of digs into what's going on, gives you some comfort and some direction and next steps in what you need to do going forward. Before we jump into the content, if you haven't already checked out our Investing Academy, we put a link below. $19.99 a month. You get a bunch of content, education, how to research stocks, as well as our Discord, which is a great place to go into and learn more, talk to people, and just ask questions. It's kind of a community, more than 1,000 Canadians in there. So a great place to check out. And again, if you're looking for fee-for-service financial planning, we do offer that, parallelwealth.com/planning. So let's cut right to the chase here. The markets in 2022 have been a wild ride. The first quarter was rocky, April hit, and it hit hard. Regardless of the position that you're in, I think there's three types of investors in the market typically. The first bucket, which is either the younger or new to investing market. And a lot of people started investing through 2020. There was a lot of stimulus checks, the market was hot, big dip, people tried to buy in. And a lot of people are learning kind of how the market works, how stocks work. And maybe they were buying, Shopify or some of these hot stocks that did really well the last few years. And they're looking at their portfolio now down 40, 50, 60% and wondering, really, is this how investing works? So that's kind of bucket one. Bucket two is kind of that middle-aged person. You're building up. You think a market drop is great because, hey, I can buy at a discount. I don't need my money for a long time. I probably fall into that bucket. I'm that middle group. When I see markets drop, I don't like it. I don't like it for two reasons. I don't like it because I never like to see my value of my portfolio go down. I don't think anyone does. But the second thing is because I have clients. I'm in in the financial planning world. I never like to see our clients' accounts go down, but I know it's part of the process and part of the ride. And I always tell clients, look, things need to go down to go up. Like that's kind of how the markets work, and they have worked for over hundreds of years. So then you have the third bucket, and I think a lot of you viewers are in this third bucket of close to or into retirement. And market drops bring panic, they bring fear, and they bring sleepless nights, and for good reason. When you see your portfolio drop 5, 10, 15%, and you're in retirement and this is all you have, right? The power of earning money through employment, going out and earning money, that's done. That phase of your life is gone or close to being done. But I'll say this, the people that are in that bucket, you've seen this story before. And you may not have been in the current position you're at in retirement. Maybe 2008, you were still working. You thought, you know what? Yeah, my market values dropped, but I have time to make this up. 2001 or in the 90s, it doesn't matter when it was. We've seen these drops before. We will continue to see them again. And I think that's why it's very important to know what you're invested in and why you're invested in it. What companies do you own? What investments do you own? Did you pick them? Did a portfolio manager pick them? Or is it a mutual fund? What is it? Who helped you pick that? And the belief you had in it going into it, if it's changed, why has it changed? And you need to kind of take a step back and revisit what you're in. So for myself, I like to buy blue chip dividend paying stocks. So I'll take TD Bank, for instance. If TD Bank, the high of this year was about $109 per share. We're trading at around $90 per share. So a bit of a drop for TD Bank. Do I think TD Bank's worth that much less than it was a few months ago? I don't, personally. Whether TD Bank's a great investment or not, I don't know. But the portfolio manager I've hired to manage my assets decided that that's a good stock, did the research, and I trust that research. Personally, I think TD is a great company. Then there's a lot of great companies I own. So when I look at my portfolio and I see a drop, I always look at what do I own and why do I own it. And that's one unique thing with BCV, who I use for investment manager. So BCV Asset Management, every time they do a transaction in my account, they send me a summary or a synopsis of here's what we sold and here's what we bought. And here's why we sold it and here's why we bought it. And so when markets crash like this, I have understanding of why I own what I own, and it gives me a lot more comfort going forward that things will recover and what I own is quality and it will come back. right now we're in an absolute broad-based market decline. So stocks, bonds, and crypto, which is kind of new into the fold, right? A lot of you are starting to get into crypto investing. All three across the board are down. Now, there's a lot of reasons for this. There's the Russia-Ukraine war, there's supply chain issues, both out of the war, right? Commodities are heavy out of Russia and Ukraine. We also have supply chain issues through China. There's also inflation, right? We're still at a high inflation point. And then on top of that, interest rates are going up. So there's a lot of factors pushing against the stock market, the economy, what's going on, and why stocks are starting to drop. The last week and a half, it's also picked up because a lot of the large companies have also been doing their Q1 earnings calls. So it's interesting though, a lot of the companies have done their first quarter earnings calls, and whether it's been good or bad, most of the time the company's going down. So a company could come out and say, hey, we beat projections, we're doing really well. The market just doesn't like it, and it shows how many other factors are kind of pointing in. Amazon, let's say, did really well. Well, the stock's still going down because that's just what the market's doing right now. So it's interesting. Usually in earnings calls, if the company does well, it really does help the stock price. In times like this, though, there's so many external factors coming in that first quarter earnings, whether it was good or bad, if it was bad, it really hurt the company. If it was good, it just slightly hurt the company. So it's a bit unique right now too, not something we always see. We've seen it in the past, but that's not typically what you get out of earnings calls either. Another factor that, played a big role in the market kind of ramping up and getting out of the pandemic over the last 2 years was quantitative easing. And that's basically the US government stepped forward and basically bought assets, a lot of bonds and fixed income type products. So they're pushing money into the market and buying assets to the point that they have about $9 trillion of assets, trillion with a T. So it's a massive amount of assets. Now they're transitioning to the other side of the coin where it's quantitative tightening. So they're actually selling those assets off, which means that there's going to be an influx into the market. We've had a big downswing. Are we going to continue? I don't have the crystal ball. I have no idea. There's a lot of external factors going into what's happening in the markets. But remember, things can turn quickly. We've seen it before and we'll see it again. If we take a step back and look at markets for the year, it's absolutely stunning, crazy how fast things have dropped. So the NASDAQ is down 27% on the year. The Dow is down 13%. S&P 500 down 18%, and the TSX is down 7%. And Canada has actually held up a lot better, whether that's because oil's done well, I'm not sure, but definitely the Canadian market's done better than the US market, which hasn't been the case for the last 5, 10, 15 years. So it's good to see. But then when you actually dig into the companies, like we're talking massive companies that lead the market. NVIDIA down 45%, Apple down 20%. And I watched a video the other day on a YouTuber that I follow and respect his research. And he was talking about Apple, and he said, what, how do we know when the bottom hits in the market? And we don't, no one has a crystal ball, but he said, typically when you see a big sell-off and correction like we're seeing right now, everything's got to be hit hard. And he said, Apple's a good example of that. The other day it was down over 5% at one point in the day, and it's down again 20% on the year. That's a massive drop. So how much further it has to go, who knows? But it does show you and confirm that we're in a massive sell-off and a massive correction. Other large companies down, Tesla down 31%, Amazon down 36%, TD Bank is only down 5%. Again, it's protected. Well, those value dividend paying stocks have really protected well this year. And that's why my portfolio was actually up in the first quarter, which is pretty stunning actually. The value dividend paying stocks have kind of rebounded back and have done very well, protected assets quite well. And I think they might continue to do that going forward. Again, that's just my opinion. That's not a projection there, but my opinion is it's probably a nice stable spot to be going forward. Again, FedEx down 20%. FedEx and Amazon, they're at my front door every day. And I know I'm not the only person doing that and ordering everything online. So again, these companies are growing, they have good assets, but they've just been hit hard. Good quality companies have been hit hard. This is a time not to go change up your portfolio or sell everything in your portfolio. Talk to your investment advisor, your certified financial planner. The time to rejig everything was when you set things up originally. Okay, so for our clients, when we set up, whether it's just a financial plan or set up a plan with some investments with an investment portfolio manager, we always make sure that everything's aligned so that your plan shows you need $40,000 in 2022. The portfolio manager has built the portfolio for that. So we're not selling off when the market declines. You need to make sure that you have a plan and an investment that kind of work hand in hand. So when the market is down 10, 20, 30%, you're not having to liquidate. You know that, hey, this is part of the ride. We planned for this. I got my cash flow ready to go. We're good to go there. So what do you need to do on your end to make sure that you pound through this market downturn, how you come out of it on the other side? So again, understand what you own and why you own it. I think that's massively important. Don't make an irrational decision. A lot of you will kind of make an irrational decision, let's sell, let's wait till the bottom hits, try and time it perfectly, get back in, or just, move into fixed income. And again, interest rates are up, so now you can go get a GIC at 2.5%, 3%, which might be the right fit for some of you, but it's probably not a right fit for a lot of you because inflation's still quite high and you're not keeping up. This is a good time to say, if you don't have an advisor, whether it's a certified financial planner or a fiduciary investment advisor on your side, now is probably a good time. It's these times where markets crash that you need someone that you can trust. So if you don't have a fiduciary investment advisor or a CFP, a certified financial planner, get one of those or both of them on your side. Remember that short term, investors don't look at intrinsic value. It's a rational behavior. And a lot of what we're seeing right now in the markets is definitely irrational behavior, right? It's people that are new to investing that are now panicking and selling out at the low. Look back at a long-term graph of the market. We've seen this before and we will see it again. Don't panic and make sure that you make wise decisions going forward and you don't let these little hiccups derail your whole financial and retirement plan. I talked to a client the other day, they're in their late 70s, and they said, you know what, Adam, as much as it doesn't make sense to pull out of the market now, we're not sleeping. That's not good for us for health. We want to enjoy retirement. So as much as it doesn't make sense from a financial standpoint, we want to pull some of our money out and just put it into a 1-year GIC. For that client, that made sense because, we could still meet their retirement income needs. Was that a decision I would make personally? No, but it's not my money. It's their money. It's their life. They need to live it. So what we did is we readjusted the plan, make sure that if we did that, they could still get the income need that they needed and all that. So again, everybody's situation is different and you need to look at your situation. Don't revisit your plan and say, well, Adam, I need to update my plan because my portfolio is down 20%. It'll come back up. What's important is that you don't panic and sell and kind of blow up the plan along the way. Have a plan. You may need to readjust. In markets like this, I'm not saying you should do nothing or you should definitely readjust. But it's not a bad time to talk to your advisor or just look at what you're into, what you're invested into, and what the plan is. Does it still line up? Does it still kind of meet all the check boxes? There's a lot of DIY investors and DIY financial plans out there that blow up because you don't have the support around you. Get people on your side, get people around you that can support you. You can ask questions, people that you trust, and will give you sound advice. So thank you so much for joining us in this video. We'll see you in the next one.